Hi, I'm Natalie Nanowski. So we're halfway through the year, just out of the second quarter, and to take us through some of the global economic activity we saw in the last few months, I'm joined by Judith Chan. She's Scotiabank's lead portfolio manager. Hi, Judith. Nice to see you again.
Hi, Natalie.
So, at the start of the year, what we saw was many countries went into lockdown when they were hit with the second or even third wave of COVID 19. That stalled economic growth on some levels. Then things really did seem to rebound. Where does the situation stand right now?
Yeah, the lockdown really has put many economies on pause, especially Europe, less so in the United States. But the rebound since then has really been remarkable. Manufacturing and services activities rebounded sharply, and we're seeing now the strongest level of activities now compared to the last 3 years. So the acceleration of vaccination rollout in especially the developed country has a lot to do with that. And the scale of the government stimulus, the combination of fiscal and monetary, has created very easy credit conditions for growth. Having said that, we're starting to see a softening in the momentum, and we may start to see a plateauing or even a deceleration of growth from here. We're starting to see softening in China and especially in some emerging markets that are harder hit by the pandemic. The highly contagious Delta variant is also causing a dramatic rise in cases in many countries. It may not lead to more lockdowns as we're learning to live with the virus, but it may dampen the economic growth trajectory.
Okay, so that government stimulus that we saw countries just pump into their economies really did keep, many businesses afloat. It even fueled a lot of growth, as you mentioned. And as you said, things seem to be leveling off at the moment. But many investors have been worried about the risk of inflation. Take us through that. How much does stimulus, how big of an impact does it have on inflation?
The market is basically unfazed by the spikes on inflation, and it's probably because the sources of inflation, that the spikes in inflation seem to be transitory in nature. So the key source was obviously the rise in energy prices, which is cyclical in nature, and the spike in core inflation was driven more by the disruptions caused by the pandemic. One of the key risk factors is that if the central banks start to shut off the liquidity pumps too soon, too quickly, it may cause an issue with the markets. But we're seeing a gradual management, a gradual reduction of the bond buying program, which is carefully articulated this time.
So, how did the bond and equity markets respond to this high growth, high inflation environment in the second quarter?
So the bond market is unfazed by the spike in inflation. Bond yields actually came down quite substantially from 1.6 to 1.3 on the 10-year in Canada, which is very low relative to the recent inflation rates at 3%. So bond investors have given back some of their gains from last year until May and June, where the bond market actually turned around and had positive returns in those 2 months. On the equity side, TSX is the top performing market across the global markets on a year-to-date basis. The Canadian equity market is more cyclical in nature and is better able to capture that positive cyclical environment. But from a Canadian investor's standpoint, Canadian investors buying foreign equities has been at quite a little bit of a disadvantage with the Canadian dollar appreciation. So with Bank of Canada also turning more hawkish, and it's expected to be the first to hike rates among central banks, it has supported the Canadian dollar appreciation.
And of course, the Delta variant is on everyone's mind right now. I'm assuming that's one thing you're going to be watching for in the third quarter. Is there anything else as well?
Yeah, so the Delta variant is a key factor to look at. Even though we've learned to live with the virus, that still might have an impact to the economy, especially to the countries with low vaccination rates. we'll have to watch to see if the spread of these mutations will reimpose some of the lockdown measures. Another thing that we'll be watching for would obviously be the central banks' action. So the central banks are continuing with their narrative that inflation pressures are transitory. But if the rate of inflation remains high for a longer period than expected, then we may see some policy actions from central banks. And if the Fed's timeline for winding down their monetary stimulus is moving up faster than the market expects, then we could see some negative market reaction. But generally speaking, we're still constructive and we're maintaining our overweight to equities and then underweight to fixed income.
Perfect. Thanks so much, Judith. Of course, a lot to watch for.
That's right.
All right. See you in the third quarter.